Morning, everybody. It's Brian. Hope you're doing well today. It's Friday, the 7th of August, non-farm payroll Friday. So, big news day this morning. Could be a market catalyst. Who knows? I've said that multiple days this week. It's been a lot of news this week. Market keeps pushing higher overall. But I don't know. We'll see what today brings. All right, so I'm just gonna run through it. Today's one of those days, like we talked about yesterday and the day before. Pretty good day to sit on your hands for the first hour or so of the new U.S. session, especially in forex. We've got the U.S. foreign exchange trading session begins here in like 3 minutes, 4 minutes, but then you've got news right after that. So you don't want to take any action in forex until after the news. The things that are kind of setting up for us, just looking across here, unless you're looking for a reversal, a lot of these currencies have already moved what their typical range would be. So be aware of that. The ones that haven't moved, a large percentage of their typical range, you're looking at the Euro CAD and the Pound CAD. Those two have moved a fraction of their typical range and could have some opportunity coming up over here post news. But again, don't do anything ahead of news. Don't do anything on the news. Let the news hit, see what the market is doing and how it's digesting that news event, and then take action based on what you're seeing. And of course, you'd want to be watching for divergence. You'd want to be watching and seeing which currencies post news are being most heavily bought, and pair those against the ones that are being most heavily sold off. So you want to see that divergence. Once you see that divergence, check your charts, look at the appropriate information over here for current range versus the average, especially depending on the direction you're going. If it's looking at a reversal, then of course the range isn't as important, because you'd be trying to capture that in the opposite direction, right? But then also consider the volume detail. As things are changing and you get your burst of divergence one way or the other here, lining up on your currency strength meter, then you're going to watch your chart over here, not only for the chart pattern to see if you've got a change in direction, but also to see if the trading volume supports that direction that you're looking at trading. All right. So not a whole lot to really do this morning. Again, just like we've had multiple days this week here in Forex, I don't have anything to enter right as the new market session opens. And that's just a facet of how things are when you've got news. With that said, let's switch over to this chart over here, and we'll have a look at what's going on S&P, crude, and gold. Another crazy face melting move yesterday, kind of towards the end of the day yesterday, here in the S&P, really just pushed fast up to almost got there to what the top. Oh no, it did it break through? No, almost got there. 3360 area is the top of the market before we entered the pandemic in late January, right? So we topped out just above 3360. I thought maybe we'd see it run up there before things started to reverse. We'll see where things go. The big news today, the big drivers, we've got the non-farm employment report. So this is the official report showing us job gains. And we've got the unemployment rate report that's coming out. How the market digests this is going to be a big event for us. Whatever comes out of this number, not only the number, right, you and I shouldn't be as concerned about the number, but the market's going to analyze and see, okay, here's the number, here's the unemployment rate, here's what, they're going to kind of interpolate from that what is to be expected in the future and how that might impact the market kind of ongoing. The other thing that could come out of left field, we've got two. There's the stimulus, the second round of stimulus package that's being debated. No matter what happens with non-farm payroll and the unemployment rate, some stimulus news could also wildly impact the market, converse to whatever these numbers tell us and what's happening there. So just, and today's the deadline on that. I've seen some lines in the sand drawn. If you're kind of watching the news about if a deal doesn't happen by Friday, there won't be a deal, blah blah blah. So anyway, there's a lot that could occur there around that as well. So as always, I know I don't have to tell you guys this because I tell you this all the time, but I'm going to say it anyway, just like a parent would tell their kid. Trade with stops. Trade. It seems like a no-brainer. Trade with stops. Plan your trade out in advance, what you're going to do, how you're going to trade it, put in a damn stop, and if it comes to that and it stops you out, you're done. All right? Don't start chasing the market. Don't start moving your stops. Don't, start revenge trading because it hit your stop. Have a plan for how you're going to approach the market. If everything lines up for that plan, you take the trade. If it doesn't, you don't take the trade, period. All right? So let's talk about what that might be. So what could the plan be for the day? So we're looking at the S&P over here. We've made some highs yesterday. Didn't quite get up to that all-time high just yet, but certainly pushed towards it. Now we pulled back a bit. We're hanging around 33.30. So that I don't have a 4-hour bias line here. I don't have a support or resistance line here. But 33.30, if we can see where we've had some previous tops on the 4-hour, it's been hanging right here, at that area right through here, that 33.25 to 33.30 area. So this could certainly be a point of interest for us. 33.20, 33.16, this is probably a bigger spot to look for, if it pulls back to this, to potentially be looking at reversals. Right now, the bias, as we can very clearly see, is long. We have a long bias on the 4-hour and a long bias on the 30-minute. As I've said before, it's okay to have our personal opinions on what we think the market's going to do, but we shouldn't let those cloud our judgment as to what we're trading. We don't trade on our personal opinions. We trade on what's happening on the charts. I fully believe we're going to see a massive correction at some point. But until the correction starts, trade with the trend. and when it does start to correct, wait for that to actually really correct. Because a lot of people, and you see it all over Twitter and the news and everywhere else, the second it makes a 10-point blip in the other direction, everyone thinks it's the correction that's coming. Like this yesterday, in the morning, we dropped from 33.20 to 3300. Oh my God, it's here. The correction's here. Yay, sell off. Well, we see what happened, right? Trade with the trend. I can't express that enough. Trade with the trend. Have your personal opinions. Even place a counter trend bet if you want to, but be prepared to be wrong. And I think in the long term, trade with the trend. It's what turtle trade. I mean, just if you don't believe me, just research it. You'll see that over time, it's historically been the easiest, best method to trade with. So anyway, going off on a long little tangent over here, but 4-hour bias is long, 30-minute bias is long. So until that bias changes, until we see this really flip down and the green crosses below the red, I know that sounds so easy, but it's a quantitative, quantifiable way to say, hey, these things crossed. I can see the cross. That tells me that the bias has changed. Until that happens, it's still just opinion, right? We've got to look for quantifiable things that are occurring in the market that would have us take some sort of an action, right? So at this point, until things change, we would continue to look for long trading opportunities. Now, maybe we come out this morning and we get this big move down and you're like, man, I don't feel comfortable taking a buy. That's fine. Just don't trade. You don't have to trade. No one's forcing you to push the button, right? And you could wait, and maybe that's the beginning of the end for this big bull run. And maybe it is. Maybe it isn't. Who knows? We'd have to wait until the 4-hour bias agreed with the 30-minute bias, and then we could take action, right? If that's what your trading plan is. Maybe you have a trading plan that's got a different set of time frames that you're looking at your bias on. But from what we're seeing here, 4-hour bias, 30-minute bias, we're still looking at long trading opportunities. So we'd look for ways to purchase and go long on the S&P. So I would say 33.20, top of that support level 33.16 area as the bottom of that support level. So somewhere around here, we'd be looking for long trading opportunities. Of course, if you're looking for a breakout, 33.40. If we push above 33.40, break through that, that would be a breakout area to go long from there. And then, of course, just another trade idea, the method that we've talked about quite a bit here is waiting for price to pull back and make lower highs and lower lows, and then trail your entry point off the top of the previously closed candles, off the previously closed lower high, with a stop loss at the bottom at that lower low. All right, so another way to go about it. Crude, we've got a mixed bag here. The 4-hour bias is still long. 30-minute bias, though, has flipped over to short. So on crude, we wouldn't do anything. Yesterday, we were talking about 42 as a potential area to look for moves from, and it did. It broke above that and pushed up quite a bit, but it's not able to stay up there. So crude is starting to flatten out. We'll see if this is the beginning of a flip, but if it is, the 30-minute bias will stay short for a while before the 4-hour bias, comes into alignment with it. So we need the 4-hour bias to be in alignment with the 30-minute bias in order to take action. Right now they're mixed, so we don't do anything on crude. On gold, we have a long bias. Crude is pushed to new highs. Yesterday, it's pulled off of it a little bit over the course of this evening, the wee morning hours, and leading up to now, we've pulled off of those all-time highs. But gold is still looking as a potential long trade opportunity here. Of course, there's still, we've got an hour and a half left before the U.S. session begins, and see how the market digests what occurs at non-farm payroll. But right now, we'd continue to look for buying opportunities on gold. So that could be a pullback to 2060 down here, 2050 area, pull back to there, and then look to go long off of that and see if it holds up for us. The big takeaway from the day, though, is that there's a lot of news. We've got the non-farm payroll, the planned news, but then there's also that looming bit of news out there regarding what's going to happen with the stimulus package, and that whatever the market's doing post news could be greatly affected by whatever comes out with this stimulus plan, if there is a plan, and whether a plan gets put in could have big effects, and if there is no plan, that could have big effects as well. So, and no one knows what effect that's going to be. Don't try to front run it. Don't try to second guess it. And I know I've said this time and time again. I'll say it again. We're just the little fleas on the elephant, right? We go where the elephant goes. If you're a bug trying to jump in front of the elephant and make it change directions, which is the elephant's the market that's moving along, right? If you're jumping in front of it hoping to somehow impact that and know more than the trajectory that market's currently going, you're going to get run over. So wait for things to actually set up and align and give you quantifiable proof that it's doing something, whatever your trading plan says. And I've given you a lot of different ideas of how to develop a trading plan over time. But whatever your trading plan says, it should have some quantifiable mechanisms in it that if these things happen, then I take this action. And if those things don't happen, or if only 2 of the 3 things happen, or if 1 of the 3 things happen, you don't take an action, right? You've got to stick to the black and white piece of that plan. That's the only way you're going to be successful. And that might mean that you have days where you don't trade. It might mean where you have a couple, a week or so where you don't trade as much as maybe you'd like to. It's not up to you. It's up to me. I mean, it kind of is, but it should be the process, right? It's all about the process. So anyway, I'm going to leave it here. So trade ideas, we covered them for forex. We need to wait until the news comes out and see what the market's doing. And same for everything, right? We need to wait till the news comes out and see what the market's doing. But for forex, we're going to watch the currencies that have the best divergence, the ones that are being most heavily sold after the news, those that are being heavily bought after the news, and we'll pair those together. If that currency pairing, though, happens to be in the same direction that the trend has been for that pair, and you've already exhausted the average range, what the typical range would be, maybe it's not a great pair to trade. Doesn't mean it can't move more, it just means what's the probability of it truly continuing on past that. right? Now, if you've got some that post news or showing signs of a reversal, and you've got buying and selling taking place that's opposite of what it's already moved, and maybe it's moved 90% of its typical range, but now it's moving in the other direction, sure, fine, take that trade. But make sure that it's also in alignment with what the volume is telling us. The volume's flowing in the same way that we would expect that price to be moving, and take that directionality. All right. For the S&P, we're looking for long trading opportunities. The 4-hour and the 30-minute are in agreement. We'd want to trade long if we're following that trend following plan. So you could look for pullbacks and see if you can get in. So we talked about pullbacks, coming back to that 33.20, 33.16 area, or breaks if you're looking for, if you're a momentum trader and you're trading in the direction of the trend, and we see price take off and it breaks through a key level, which is that 33.40 is that next top level here, and we break through that, that'd be a spot to look for buying opportunities. So there's a trade idea there. Crude, nothing on the table for us. We've got mixed bias. Gold, we'd want to continue to look for buying opportunities, and that would mean a pullback back down to that 2050 area would be a great spot to look for potential entries there. Pull back to 2050, and then see if we could potentially buy off of that. Again, if you're trading with the trend. If you're counter trend trading and you're looking for places to maybe jump in ahead of this slowing train, I would say today maybe put that on hold for a minute. You could certainly wait, and look for key levels, on the S&P, for example. If we break down below that 33.16 and we've got good momentum pushing it through there, that could be a spot to potentially sell off of. But with all of these, use a stop loss and be prepared that it may not be the beginning of that reversal yet. And if it's not, be prepared to jump out of the way so you don't get run over by the train. Right. So anyway, that's it for now. I'm going to leave it here. We'll see what happens on news, and if we have some trading opportunities, we'll post those up and tell you what they were and how that worked out. And that's it. All right. Have a great day. Bye.